So even with a quiet day for the broader markets, is this momentum trade going to power the rally into year-end? Guy.
Well, I will tell you, Tim Seymour's been talking about the semis and the importance of it. I'll say this, today was a day where the market reversed, I don't know, noon-ish or so. S&Ps were trading lower. It made a new all-time high. You have this government shutdown. You have all these things in terms of valuations extended. Today was a day where the market could have really given it up, and it didn't, and it went back to exactly what you're talking about, momentum. Now, why is that? I wish I could answer. I think part of it is October, the chase is on. People behind the eight ball have to put money to work, and I think to a certain extent you're seeing that, and valuations be damned. I'm surprised at how strong the market was in terms of those stocks, but nothing should surprise me at this point.
Yeah, as far as the momentum, right? So we're seeing maybe some slight underperformance from that Mag 7, and some of the groups that you guys are talking about are taking off. And then a Robinhood is kind of interesting because that's where all this stuff is kind of traded on, right? I look at today and I say to myself, here's another situation where one of these neo clouds gets more detail about a contract from a major hyperscaler as Microsoft and Nebius. Nebius rallies like crazy. We saw this with CoreWeave earlier in the week when they got this contract from Meta. So you're seeing this sort of performance. But Meta and Microsoft did not go up on the days that they are announcing those sorts of contracts. So to me, it feels like that sort of trade is getting a little bit long in the tooth as you see some of this money move, towards these other groups. You saw crypto, obviously, Bitcoin's about to make a new high. But what also stuck out to me was recent IPOs. If you look at Bullish, you look at Circle, they're obviously crypto related. They had big days. So there's a lot of stuff going on. Everyone wants to keep making this comparison to the tech bubble that we saw in the internet in late 90s. I think it feels a lot like 2020 and 2021. There's a lot of comparisons right now.
Well, it feels like FOMO, and it feels like FOMO in anything digital. And it feels that this is a place where, on a day or in the last 24 hours, we put a $500 billion market cap on OpenAI. It's the largest private company in the world. They raised $6.6 billion on an employee sale. You have a couple other stories both in that market. There's even there's a German AI play, DeepL, which is talking about an IPO in the U.S. And it's just interesting that the rest of the world is bringing some of their stuff. You have Samsung and Hynix also on a very big deal, also in cooperation with the OpenAI. And it does, by the way, remind you that Samsung really is maybe in terms of memory chip in this space, the big player to watch. And I think a lot of U.S. investors, because that stock does not trade here, don't have a lot of exposure to Samsung, although you can get it. So that's what today feels like. And it's, of course, framed around this second day of a government shutdown that we spent a lot of time in the last week, but really in the last 48 hours understanding what this means and what it doesn't mean. What it doesn't mean is that, the conflation between this and a debt ceiling dynamic. In other words, that was put aside when in the big, beautiful bill. There is no debt ceiling issue. The Treasury is not going to have any issues continuing to issue. And it's really just a question of how much transparency or lack of transparency is going to hold the Fed back from doing what they want to do. We're not going to have a payroll number tomorrow. We're going by, second derivative type gauges on a labor market that doesn't look so strong. So right now, that's probably, I know it's crazy, but it's probably good for equities.
Yeah, so we're only talking about public equities right now. You just mentioned OpenAI, $500 billion valuation. Here's one thing I think is really important here. So in the past cycles, if you worked at a private company, a startup, you really didn't have the opportunity to sell secondary, right? So think about there are hundreds, if not thousands, of these tech employees who are able to sell when these valuations are getting so big. And so OpenAI, why did it trade at $500 billion today? Because insiders and employees and founders, they're all being able to sell $6.6 billion. Just think of that as being extracted from a company that is going to lose maybe $13 billion this year. They're going to make maybe $4.5, $5. I don't know what the number in revenues. It's like between 5 and 10 or something like that. And these folks are just taking money out of the, Where's that money come from? VC funds that raised it from pension funds, that raised it from sovereign wealth funds, that raised it from, wealthy individuals. And you see this money that's being circulated around. And it's kind of an interesting thing to think about here because in past cycles, we really haven't had that. There's been these lockups. You got to wait until the IPO, and who knows what the heck's going to happen after that.